Hemant Jain, President of PhD Chamber of Commerce. I'm happy to bring you in, Mr. Jain. I just wanted to get a sense from you. When you look at the 6.5% growth number, now, of course, there is conversation on both sides. One side saying that, yes, this is a great number, and the other side saying that, don't jump too soon. We still have 3 quarters worth of data coming in a little later. But how are you seeing this, as a voice of the corporates?
Thank you, Vishwanathan, for having me on this panel. I think today we are in a very troubled time when global uncertainties are very high level. So anybody to comment on what will happen tomorrow is a little premature. But I think we have made some structural reforms. The government has been continuously been making some structural reforms because of which this growth was expected. I think this growth was overdue, I would say, let me say. So I think the structural reforms made by the government has seen good growth across the manufacturing, services, agriculture, and construction sector. So we will point on the Indian story, but yes, the global uncertainties has actually put a slight bump in the whole story.
Okay, Mr. Jain, I just wanted to get a sense from you when you're looking at the uncertainties that the U.S. tariffs pose on India's export sector. Is that something that is still a considerable worry? Because, of course, the Q1 numbers don't quite account for that impact yet. Maybe Q2 or Q3 numbers will better show that impact play out. But how big of a worry is it still?
I think Q1 number wouldn't show because Q1 numbers, the tariff didn't come into effect in Q1. The tariff has come into effect in Q2. So they will have an effect. I think certain segments, especially textile, gems, and jewelry, there will be effect, and I think the government is doing what they can to say look at alternate market. But India's and US were the biggest trade partners, so I think it would not be easy for us to find a market for it. But there may be a short-term dip in certain segments. But long-term, I feel that this market is here to stay. This is the India has been the export only accounts 2% of our GDP, so the effect will be there for sure. But the effect will be, I think, limited to few sectors of the economy.
Right, Mr. Jain, I wanted to get a sense about the nature of private capex that's looking quite good if you were to look at Q1 numbers. However, now the expectation is that Q2 may not show that bump again because people are going to hold back on a lot of manufacturing as well as stocking before the GST rationalization comes into play. I'm just trying to get a sense from you. Is that something that we need to be bothered about, or it's just transitory, and as time passes, by the end of this financial year, you will see things sort of normalize again?
I think what the government is doing for GST rationalization, this will have definitely effect of the reduction in prices of many goods. So there, till the time it does come in, there is chances of demand going down because consumers will hold back their purchases. But long term, if I look as a whole year, I think there couldn't have been a better step by the government to give more money in the hands of people to increase the buying power. So we see at least when this kicks in, maybe in September end before the festive season starts. I think this whatever has been lost in this 1 month I think the consumer will catch up in next quarter. So I think it's more short term. Long term, I think this GST reduction, or structural reforms in GST will really add to the growth of the consumption sector, the rural and urban both.
Okay, Mr. Jain, I want to ask you one last question, and this is as a representative of corporate India who's joining us on this conversation. Comments by the US president about India being a dead economy. I mean, clearly this is it's coming about 30 days after that comment was made, and it's sort of a perfect reply or a perfect foil for that comment. But just tell us about how one should look at India's economic potential. We, of course, are still one of the fastest growing economies in the world, and there is no change to that even in the coming months. But how should one look at the domestic growth impulses that are in front of us now?
Surely, I'll take some time because I have a very strong view on this.
Sure.
India is the youngest and the most dynamic economy in this whole world. If anybody calls it as a red economy, I think this is a statement which I think nobody will take it seriously. We have the most vibrant economy. We have, I think, today among the growing economies, we are the best performing economies today. So anybody says India is a red economy is a misstatement, or I think there is some other reasons for saying that. But today we are the right track. I see great potential because we see private sector investing. We see FDI still continue to come into India. We see that even after President Trump saying to Apple that please don't put a manufacturing plant of Apple in the country, Apple is going ahead and making all the iPhone 17 will be made into India. So this is because the India's resilient and democratic setup which has been done. This is not a work of one or two days. It's a work of last many years to ensure that India's PLI schemes, India's Make in India policy, India's long-term vision of Viksit Bharat. So I think India's story is here to stay, and I really have very strong views. If somebody is commenting that India is a dead economy, I think is a total mistake.
All right, Mr. Jain, thank you so much for taking time out and joining us on this conversation, sir. It's a pleasure having interacted with you.